Cathie Wood comes out and says, get ready for a recession, and these stocks are going to soar. One of them is one of the t-shirts I'm wearing, but we'll get to that at the end of the video. She has a warning going on, and I'm going to go over it because it's pretty interesting. Someone like her who's been in the market for decades now, we gotta listen to her. All right, so let's get down to it. Smash that like button, hit subscribe if you guys haven't already. Let's go. Cathie Wood is saying that the stock market is reaching a volatility alert similar to 2008, 2000, and 1987. Now, if you guys been in the stock market for some time and seen history, those years were the year before we had a big crash in the stock market. So she is saying that that's what the stock market is seeing now, the volatility alert. She's saying that something is changing in the economy, in the market, and the economy is going through a rolling recession since interest rates has gone up, and she is absolutely right. In Canada, we've been in a recession, even though they say we haven't, but we are. If you come and see what's going on here, we've been in a recession. The US is doing something better than Canada, but I think they're also somewhat in a recession as well because prices are going into deflationary, prices are going down, even though we had the jobless report come out today better than expected. So it looks like a soft landing is more likely, but I'll give my thoughts at the end of this video. But she is saying that something is changing in the market, and every time we had a recession, something had changed. Like, for example, in 2008 or 2009, what changed was the internet came into power. Pretty much the reason we've had a massive rally since then till you could even say 2020 because we had that pandemic and stuff going on. But we have had a strong economy since 2008, 2009 till now. And I would blame this on the internet. There's so many jobs out there on the internet. I mean, you could even make your own thing on the internet and make a whole bunch of money. So that changed in 2008. In 2001, things changed because of the dot-com bubble. The internet I wouldn't say that was the internet, but I would say that was a new industrial taking over. So right now, what's happening, if we do have a crash, the market is changing in AI. We'll get to that in a bit as well. But she continues to say that part of this volatility includes the carry trade that happened in Japan with the yen, selling that, buying US dollar, buying US assets, and then, Japan increasing the rates, all that kind of stuff. That already has been priced out of the market. I don't think that has nothing to do with this. So we're going to skip that part. But she did make this a big point, which I disagree because, the market is rallying right now, right? So I don't think that has nothing to do right now. Now, if Japan continues to increase the interest rates, we may have a little bit of a problem. And I think they are going to increase interest rates. But for now, I don't think it's that much of a big deal. Now, because of all this volatility and all these things going on, she said that the Fed is on high alert, and the chances of the Fed decreasing interest rates are getting higher and higher. I think in September right now, because of the jobless report that came just today, it's showing only a 0.25% decrease, highly over 70% in September, which I do think we're going to get two of these end of this year, 2.25% down, rates going down. I do believe that. But she says that the stock market is telling the Fed that, wait, don't decrease rates yet. Make sure inflation has been killed off. And we can see that inflation has gone below 3%, which we are now in the 2% range, which is, I got to give it to the US, to Joe Powell, man. He did a really good job. He really did what needed to be done to bring a soft landing. Now, could he have done this earlier instead of waiting until things got really bad? Yes, absolutely. But nonetheless, it looks like the US is going to be having a soft landing, which is pretty good. It's extremely bullish for equity markets. Now, Cathie Wood is saying something very concerning here. She says, I got all my notes here on my laptop, so I'm going to read it off. She says that inflation is unwinding faster than any traditional indexes. So this includes the CPI. In other words, prices are going to fall and we're going to be in deflation. She says that corporations are losing pricing power, and to save margins, they have to lay off people and accelerate moves to increase productivity. She says unemployment will increase. Fed will pivot. They have to pivot if they want to avoid a recession. Now, here's the thing. It looks like the Fed is doing right. They are thinking of pivoting. I think September we are going to get a cut, and that's going to be good for, Tesla and so many other markets as we see today. And that's exactly what we need. That's what we want. If interest rates get cut heavily down, we're in a recession. And that's what Cathie Wood is warning. But there's a big but here. She says that interest rates coming down is positive, and I do agree. But here's the part where would make me go sit back in my chair a little bit. It will not prevent a recession quickly. Now, here's the thing. If we do reduce interest rates slowly, I think we can avoid a recession entirely. But she's talking about the interest rates getting cut down massively down. And that's what's going to trigger the recession. But she says that consumer businesses that know interest rates are coming down, they will wait. Now, here's the golden opportunity, guys. When interest rates do come down and we have deflation in full effect and prices are coming down, consumers and businesses, you and I, we're not going to say, oh, let's go buy right now. We're going to say, well, hold on. It's going to keep going lower. Just like the psychology with Tesla stock and other stock, when it goes down, no, it's going to go lower. Just hold on a bit. We're going to have this phase now. I don't know. It's a small window that if you can capitalize on it, you can make a whole bunch of money, whether it's real estate, whether it's stocks, whether it's anything. It's this period. I don't know how long this lasts, but it doesn't last long. So she says that people will wait. They won't jump in right away. They will wait and see what will happen. And this is what's going to trigger the big recession. Now, here's the interesting part. She says that lower interest rates are the defining factor in terms of rotation in the market away from a concentration group of stocks to a broader base of stocks. Now, this is the part where it gets really interesting. She says that innovation solves problems. Productivity gains will happen as AI rapidly increases the economy. So she says when interest rates do go down, we will have some sort of a recession. But the companies or the stocks that will do really well are ones that have an AI or have productivity gains through AI that increases the economy and innovation solves problems. What companies does that sound like? Nvidia for sure comes in mind. Yeah. Palantir, yep, that comes in mind. So, a company that starts with a T and ends with an A. Oh yeah, that's right. I'm wearing its t-shirt, which is merch, by the way. You guys can get here in the car in the corner. Tesla. They are the biggest AI play with real world data out there right now. And once the market realizes this, I think it's going to be one of the stocks that's going to roar the most. I mean, just today, jobless claims came out and Tesla is roaring the most. So she's saying, overall, in a nutshell, she's saying that when this recession happens, now again, I don't think there's going to be a recession. It looks like it's going to be a soft landing. It's going to be a really short recession if this happens. It's not going to be bad. Unless something goes really wrong. That's not out of the picture, but the way things are going, it looks like it's going to be a soft landing. But she's saying that once we have a recession, the companies or the stocks that are going to help this economy are the companies that have innovation that solves problems, that includes AI, because productivity gains is what's going to increase the entire economy. My point of view, guys, is that after this recession, it's going to be the age of AI. It's going to be the age of AI. And who is best positioned to capitalize on this? In my opinion, I think it's Tesla. You may think it's Palantir. You may think it's Nvidia. Those are not wrong choices. Those are correct. Could be even Microsoft, maybe even Google to a certain point. But a lot of AI companies that are cash flow positive, who are making money and are positioned well, are going to do flipping great. Now, this is not financial advice. I'm just looking at data and looking at companies that do these things. And these companies do these things. Now, whether you guys want to capitalize it or not, I'm just saying what she is saying. Do I agree 100% what she says? No. But she has been in the market for decades. And I wouldn't shrug this off. Nonetheless, a recession does not look like it's going to happen. But you never know what could happen. But if it does happen, I hope you guys know what to do. But this was Cathie Wood's warning. Get ready for a recession. And these stocks will surge after the recession or during the recession, most likely after the recession. Hope you guys enjoyed this video. Smash that like button. If you guys enjoyed this video, you'll definitely enjoy this video. Subscribe, get your I Bought the Dip t-shirt, 10% off, rip shorts if you use that discount code. And I shall see you guys in the next video. See ya.